If you have that squeeze, that equals rough time for profit margins. Are we in for a rockier 2020 when it comes to earnings, and how are you modeling that right now?
You know, Alex, we were already anticipating that we would see margins get squeezed a little bit because when you look at the second quarter and the earnings that came out, margins were at all-time highs. They were fantastic. And we anticipated we would see that come down a little bit because of the supply chain issues that we had. So you look at the numbers that we see now, so many companies were talking about being able to pass on those price increases. We heard it from a lot of food companies like Chipotle. We heard it from Procter and Gamble. So now it's looking like perhaps those are not being passed on maybe as much as we anticipated. You do get a little bit of a margin squeeze, but I think we're going to see maybe a little bit of a reversal next month, kind of like we're anticipating in the labor market. We think Delta variant played a huge part of the less than expected labor numbers. And I think you saw that in CPI too, when it comes to the transportation to hotels and motels. A lot of that pulled back when the Delta variant was increasing. And so as that peaks, which hopefully is soon, we'll see some of that CPI inflation come back perhaps next month.
Victoria, the big thing that drives the market at the moment is liquidity. You've got all these worries, be it a margin squeeze, be it labor shortages, all kinds of factors coming into play at the moment. And there's plenty to think about, yet there's a huge amount of liquidity still out there. Does today's data, does the data broadly sort of push us towards the idea that maybe the Fed taper comes later and that liquidity lasts for longer? Because this seems to be the key pivotal moment that we're all waiting for.
You know, Guy, I think the reports that we have seen lately actually puts the Fed in a really good position. If you have people saying they need to go ahead and taper now, they have some precedents to do that, right? Because you've got Bank of Canada, Reserve Bank of Australia, you have ECB, not officially tapering, but reducing their purchases. So they have a little bit of precedence to go ahead and taper now if they want. But coming back to the two reports we just talked about, the labor report and the CPI report, that gives them a little bit of breathing room to say, you know what, September is not the month to announce this. It gives them a couple more months to wait until the next meeting in November. So I think they're sitting in a really good position regardless of which way they want to go. In reality, whether they start tapering September, November, December, I don't think it makes a big change in our outlook.
Well, but to Guy's point about the liquidity issue, is it in the Bank of America Fund Manager Survey, which we love to look at here at Bloomberg, because it really is a granular look into how investors are thinking about it. In their last survey, they said that there was disconnect between asset prices and fundamentals, and you can understand that's going to be basically because of the Fed, and that disconnect is actually growing. Do you agree with that kind of assessment? And we saw it just in the last few days. You have strategist after strategist calling for a correction or being worried about it, yet we're near record highs for the S&P.
Yeah, I mean, the liquidity is out there and it's not going away. Even if the Fed starts to taper, the balance sheet is still growing every month. It's not that it's declining or it's reducing, it's still growing. So the liquidity is out there and people know that. And I think that's why you continue to see markets reach towards new highs. We're only, 2.5% off of a new high again. So I think that liquidity is there. It's supporting the investor. They're going to go ahead and keep investing in equities, which we think will trend higher, even though we're going to see some rockiness through the end of the year.
Which equities? A number of segments of the market have already had significant periods of either going sideways or underperforming in fairly significant fashion. Small caps look like one of those. Victoria, if we do see inflation abating, does that mean actually we start to see again another rotation sweeping across the market? Maybe we start to see small caps and that segment of the market coming back?
There probably will be multiple rotations, Guy. I mean, we have seen it over the last 6 months. You know, the question of growth versus value and small caps coming in and the reopening play and how you want to position yourself. And it's really kind of a fool's errand to try to time all of those perfectly. So when you ask what equities, I think an investor has to look at their total portfolio and say, look, yes, we like some of these growth names, some of these secular growth names that are there that have done so well, but maybe trim those names a little bit. It's what we've done, and build that portfolio out a little bit, whether you call it a barbell or a balanced portfolio, and add some cyclicals, add some value names. That way, when you have the choppiness in the market that we anticipate you're going to have, you have that balance built in.
So where, in our tease to you, we talked about TJX being one of your top holdings. So where do you get that value now?
Yeah, I think you look at where the consumer is. We really think the consumer is kind of the backbone right now. We know that savings have come down from where they were maybe a year ago, but the demand in this economy is so strong. We're not seeing the demand lack, and the consumer is there to do that. So we think TJX is a great way to play that as stores open back up. We like Capital One. I mean, we've talked before, Alex, that we've always liked the credit cards, even during the pandemic, MasterCard and Visa, because of the payment component. Capital One ties in a little bit more on kind of loans with consumers. And as we start to open up and as they start to spend more, we think that's a great way that you can play the consumer while still having that balanced portfolio.